Are you ready to take your first steps towards financial freedom by investing in property? Whether you're a first-time investor or you've started your portfolio but need some help continuing to grow, 2022 REB Buyers Agent of the Year and Rising Star finalist Lachlan Vidler and his team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take your next step in growing your portfolio. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment property. Visit atlaspropertygroup.com.au to book in your discovery call absolutely free of charge.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Good morning, good afternoon, good evening, whatever time it is that you're listening to this episode of the Smart Property Investment Show. Welcome. I'm Grace Ormsby, super excited to be bringing you a brand new episode, and it's a pretty exciting one, I think. There's a lot going on in the property space at the moment, a lot of external economic influences, I think, would probably be a good way to kind of wrap up what is actually going on. But to talk us through some of that today, I'm super pumped because we've got Nerida Conisbee joining us via Zoom. She is Ray White's chief economist across Australia. Nerida, thank you so much for your time today. Super excited to be catching up again.
Thanks for having me. I'm so happy to be here.
It's a pretty crazy time. When I first pitched doing this podcast with you, we had plans to be talking about electric vehicles and spare bedrooms and the rental crisis. We're going to get to all of that at some point today. But since we've had that conversation, stamp duty has obviously, it's been quite topical of late, but has reared its head once again with the announcement from the New South Wales government in the state budget this week. Very, very timely that it would be changing, looking to reform that space. And while that has been something that's been talked about for a long time now, and there's always going to be conversations around it, it's the first time we're probably actually seeing that reform start to take shape. What are your thoughts on it and what's going on? And actually, let's go back a little bit further than that and talk about what that reform actually will be doing at the moment. What are those first steps looking like?
Yeah, so it is exciting that it's back on the agenda. It was something that Dominic Perottet introduced back prior to the pandemic, and then obviously the pandemic hit and it went on the back burner. But he has launched it again as a policy decision and a significant change to our tax system. So basically, what the New South Wales government is trying to do is make a gradual shift from stamp duty, where you pay a lump sum on the purchase of a home, and in New South Wales that is quite significant given how much house prices have gone up, and switch to an annual land tax. And this is something that has been done in Canberra. So Canberra have started a gradual shift to a purely land tax-based system, and overall it is definitely a good move. You know, we know how challenging stamp duty is for people. We also know how challenging it is for governments in some ways. So it is a very good move. I guess the big one, though, for the New South Wales government is that it does have the potential to leave a very big hole in their budget. They do rely heavily on stamp duty, and I think last year they around 25% of total tax revenue came through stamp duty. So moving to land tax does mean less money, and the Perottet government have actually gone to the federal government to say, look, we're very keen to reform the tax system, but this is going to leave us with a $2.5 billion hole in our budget, and they have been asking for some sort of recourse for that change. So that was a couple of weeks ago, and then most recently we have seen Perottet government come through in their budget to say if you are a first home buyer, you don't need to pay stamp duty, but if you don't pay stamp duty, you'll need to pay land tax. And that obviously is a big switch for people, but we know for first home buyers it is a positive one, because first home buyers typically do struggle with that initial deposit, and if they don't need to pay 40 grand, 50 grand or whatever to buy their first home, it does make it a lot easier for them.
It is different too, because I guess what they've realised as well is that they've already got some pretty big concessions in there for first home buyers buying under a certain threshold. So they couldn't then come in and say, well, we'll get rid of stamp duty and then put this land tax in, when a lot of those first home buyers weren't actually paying for it in the first place.
Well, this is the thing, and I think this is why they've done it for first home buyers initially. It is partly because first home buyers do struggle to get a deposit together, but ultimately it won't make a massive difference to the revenue that they obtain through stamp duty. So, they are moving very, very carefully and slowly, and there's, it is a change. And it's a change not just from a government revenue perspective, that it won't just leave a big hole in the budget, but it is also a change for people to get used to. If you've paid stamp duty then already on your home, and you purchased, even over the last decade or even over the past 20 years, to be told then you've got to start paying a land tax bill every year, it is something that is, very challenging and quite hard for a lot of people, particularly if they are on fixed incomes and they are elderly. It is a significant expense for them.
I love in a recent economic update you did, Nerida, that you mentioned being a tax on mobility, stamp duty itself. It is interesting, isn't it? Because when you're paying that lesser amount as a land tax, you're probably going to see people moving more regularly. Would that be a fair assumption to be making?
Yeah, it does allow people to move more regularly. If you have to pay 50 grand, 100 grand extra to move home, then that does make a difference. So it does potentially prevent some people from moving from a job in, Sydney up to Darwin, for example, if they don't have to pay for that stamp duty bill. The other thing, though, it does prevent is people staying in homes that may not be suitable for them anymore. And we know that there is a challenge at the moment, that there are a lot of older people in very, very large homes around Australia, around Sydney in particular, and there are a lot of families looking for suitable homes in many tightly held suburbs. So it does have the potential not just to allow people to move from one suburb or one city to another city. It does provide a little bit more of an incentive for people to either move to a smaller home that's more suitable for their stage of life, or alternatively from people to move from a smaller home and upgrade to a bigger property.
I'm curious too what your thoughts will be on investor buying habits. Will it be more of an incentive for them to start, transacting a little bit more without that big imposition of a stamp duty?
Yeah, this is something that isn't really discussed that much, but it is because you don't have such high transaction costs, it does allow people to buy and sell a lot quicker. And we certainly saw it in New Zealand through the pandemic, and in New Zealand they had very similar price increases to Australia, the same drivers, very low interest rates, a lot of incentives, high savings rates and the like. And but in New Zealand, the rate of property turnover was quite quick because people weren't restricted by those transaction costs. So it's quite similar to how it's similar to how the share market started behaving once a lot of those very high transaction costs were reduced. So, 20 years ago, if you wanted to buy and sell shares, you had to employ a stockbroker. It was super expensive to do that. Every trade was really expensive. And so the ability of people to buy and sell quickly or to take advantage of market conditions wasn't really something that was that easy for most people. The same with property now, that, when we do see a reduction in transaction costs, it does allow people to get into the market more easily. It allows them to transact more quickly. That was the case in New Zealand through the pandemic. We did see a high rate of property turnover because the market was moving quickly and the transaction costs were very low.
We're going to take a quick break there, Nerida, but we're going to come straight back because there's still so much to unpack with all this stamp duty stuff. See you on the other side of the break.
Ever wondered how you can invest like the top 1% of Australian property investors? Henderson Advocacy has been at the forefront of helping everyday Aussies improve their financial freedom. So if you're a savvy investor or someone just starting out on their property journey, give Henderson Advocacy a call today. Head to www.henderson.com.au. Don't invest alone. Invest smarter.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Nerida Conisbee, Chief Economist at Ray White. Nerida, just before the break, we were unpacking some of this, what this stamp duty change to land tax could actually look like and its ability to actually improve the number of transactions that take place, making it easier for people to get into the market, get out of the market. It all sounds like quite great news for investors. But obviously at the moment, you said Canberra is already starting to move to this system. New South Wales is taking these first steps. How far off do you think we are from national reform in the stamp duty space for this to be taking place nationwide?
Yeah, look, it is an interesting question. We know that Victoria are looking at it very closely. I mean, they've at various times had reductions in stamp duty costs to first home buyers, as we talked about earlier. And we know that there is some appetite for serious reform. I think the thing that will push other states to look at it more closely will be if the New South Wales government can get some funding relief from the federal government. And that's the key. You know, if that $2.5 billion hole is at least in part filled by the federal government, I think at that point other state governments will look at it more closely because, you know, this is the biggest challenge for a lot of them at the moment, that it is such an incredibly important part of state revenue. And we know moving from stamp duty to land tax does result in more stable revenue year to year, but it also results in less revenue year to year. And as a result, there is a bit of a shortfall that will need to be looked at. So I do think if we do start to see the federal government provide some funding to New South Wales government to provide this, you know, to ensure this very significant tax reform, then other state governments will also look at it more closely than they have prior.
Considering the market has shifted so much already in 2022, we've seen record gains across the board pretty much through all of 2020 and 2021. And now we're obviously coming out the other end of that. Things are changing again. Do you think this is a good time for this kind of reform to be talked about and looked at more closely? Is there an ability there for it to continue propping up the market a bit and just ensure that it is a little bit more insulated?
Look, I don't know. You know, look, I think the way it's moving is so slow. You know, the New South Wales government announced in the budget yesterday about scrapping it for first home buyers. But, you know, as you said earlier, you know, there's often times that they'll pull back on stamp duty for first home buyers. So it's actually, and this time they're asking them to pay land tax instead. So, you know, it's actually a lesser impact than they have provided in previous times. So I don't know, you know, it's a good time in that I think people are more open to reform at the moment, that we have come through a pandemic. Obviously, the pandemic was not a great time to introduce serious tax reform because people were concentrating on other challenges. So, you know, we have, you know, pretty much come through it now and people are open. There's a new federal government that is, you know, more focused on things like the environment and global issues and, you know, bringing, you know, depending on what side of government you're on, obviously not everyone's happy, but there is a new energy in federal government and change. So, you know, I think those sorts of things are allowing the New South Wales government for Dominic Perottet to say, well, you know, now's as good a time as any. Let's start the ball rolling and get the process moving forward. So I don't think necessarily it will prop the property market up, but I do think the fact that the property market is starting to stabilise and, you know, we're in a new economic cycle makes it a decent time to start considering it.
A lot of talk has recently come up about the rental crisis that we're currently facing here in Australia. And obviously this kind of reform in the future could go some way to helping with some of that. But as you've just said, it could be a long way off having actual material impacts on the market in that way. Where do you see we're sitting with that rental crisis? Because I know there's a lot of investors out there who are investing at the moment, and are looking at what their next move will be. And while we do have all this talk about rental vacancy rates being so low, there's still a lot of price pressures on just on affordability, full stop.
Yeah, the rental market is very challenging for renters. Obviously, it depends on what side of the fence you're on. Obviously, great for investors. The rents are rising. So rents have risen by almost 20% since the start of the pandemic. It's not something that gets talked about much. We've talked a lot about pricing. Pricing has shot through the roof, and we know that we've never seen so much price growth, but rents are obviously. Will have obviously risen a lot. I think that the big difference, though, with rents as opposed to prices is that prices are now starting to stabilise, but rents are still growing and will continue to grow because international migration is starting up, population growth is continuing, and we're also looking at a period of undersupply for housing because construction costs have gone through the roof, and we've seen rising insolvencies in the construction sector. A lot of developers have got approvals for projects, but they possibly won't go ahead for quite some time because of these problems. So the rental crisis won't end anytime soon, but there's still very little focus on it. If we have a look at a federal level, the focus is on first home buyers, and there's also a focus on social housing, which is clearly important. And then at a state level, it is mainly around stamp duty at this point, and also first home buyers. So it is something that's not being looked at. But then on the other side of it, if you are an investor, and we are still seeing very high levels of investor lending, it'll probably come back because interest rates are going up. We know that there is a very clear link there, but for investors, we know the next year we're probably not going to see almost certainly not going to see the level of capital growth that we saw last year, but rents are growing and rental yields are starting to improve. So from an investor's perspective, it's actually not a bad market to get in, provided that you are someone that isn't just looking for capital growth, but is also looking for a decent annual rental return on your investment property.
Some good points to make there. And on the topic of rate rises, we're obviously heading into July, a new financial year. I know we're crystal ball gazing. No one knows for sure what the Reserve Bank of Australia will be doing, but I would love to hear, and I'm sure our listeners will agree, we'd love to hear your thoughts on what could happen at the next meeting of the board of the RBA.
Yeah, so it does at this point, it almost certainly looks like an increase. When you have, obviously, inflation is still very high. We won't get a read on June inflation numbers till the end of July, but we're still, in terms of how the Reserve Bank is moving now, they have still moved quite late compared to other governments around the world, and they also have moved fairly slowly as well. So I guess there's those two factors, which likely means that they will continue to increase them for the time being. As to how far they'll increase, it is really hard to tell. I guess the main point being that a lot of what's driving, or pretty much everything that's driving inflation, is out of control, out of the control of the Reserve Bank and out of control of the federal government. As Australia, we can't do much about the war in Ukraine. We can't control petrol prices. We can't unblock the supply chains on our own. We can't go against China's zero COVID policy. We can't undo what happened with all the timber that got burnt out during the bushfires in 2020. So, all of these things are leading to price increases. And the only lever that the Reserve Bank has is on the demand side. So they're putting up rates and just saying, well, we know there's all these problems. We can't have runaway inflation, but we can't do anything about those issues, but we can slow you guys down and stop you spending so much. So that's what they're doing at this point. As we get towards the end of the year, though, it is there are just wildly different opinions as to what could happen. And even at a global level, there was a report that was released last week by the World Bank, and they said they cut their forecasts for growth. They said, we don't expect economic growth to be as strong as we thought last year. So, things are going to slow down significantly. And in their statement, they said, well, we also think we're in a really high-risk environment where inflation is going to be really high, and we're also going to see high unemployment. So they had quite a negative outlook to say, things are going to get worse and they're going to stay really bad for quite some time. And at the same time, we had the OECD come out with their forecasts, and their forecast was far more positive, and they were saying, well, we think a lot of what's driving inflation will sort itself out this year, and supply chains will come unblocked. China will get back to normal manufacturing. The war in Ukraine will resolve itself. Fuel prices will come back down, and inflation won't be at risk. And potentially, and possibly, we will next year start to see a series of interest rate cuts. And so that they're two eminent bodies that have come out with wildly different views as to what can happen by the end of the year. So personally, I prefer the OECD outlook to say, a lot of these inflation issues, they're temporary, they're dragging on a lot longer than we hoped, but they will be resolved. And by the end of the year, we will be in a position where interest rate rises can start to plateau and potentially be cut from next year. So, I think that's the reality of where we sit now, that it is really difficult to tell. But, at this point, hopefully we do hit a situation where we're not in a period of stagflation, where we're not just going into recession, but inflation is out of control, which is really the worst position you can be in.
There is something reassuring, Nerida, in the sense that if two huge economic global bodies can't work out what's going on, then we don't have to be, we can be wrong. We can, no one really knows, I guess.
Yeah, and this is the reality. I think, forecasting is such a difficult thing to do, and there's so many assumptions that you need to make, and you can swing your outlook from being wildly positive to wildly negative, particularly at a time like now where there's just so many complications. I mean, similarly at the start of COVID, everyone got it wrong. You go back to April 2020, and we had, I guess the most popular forecast was a 30% decline in house prices, and it did in fact move in exactly the opposite direction. We saw the strongest price increase over 2 years that we'd ever experienced. So, it is incredibly hard to get it right, but we can look short term to say, well, we know these influences may change, and we can see change happening. And then I think for properties, it just shows the importance of looking at it as a long-term strategy. And, we know that house flipping can yield results and can work incredibly well in fast-moving markets. But at the moment, it's not the time to house flip. It is time to hold and make sure that you've got a good portfolio of properties and you're managing them appropriately, getting the best rental return, because that's something that you can have some control of at the moment in a tight rental market.
We're going to take a quick break there. We'll be back in just a second with more from Nerida Conisbee.
It's time to get help. Interest rates are increasing. Inflation has hit an extraordinary 5.1%, and the chance to secure a golden egg property is getting narrower by the day. Dragan from Buyers Agency Australia has been presenting the facts and helping property investors make smarter, well-informed, educated decisions in property for years. So, what are you waiting for? Get in touch with Dragan today at www.buyersagencyaustralia.com.au. Invest with integrity.
Welcome back to this episode of the Smart Property Investment Show. We're joined by Chief Economist of Ray White, Nerida Conisbee. Nerida, it's been so great to chat with you, just putting our finger on the pulse of what's going on with stamp duty and interest rates at the moment. There's a lot up in the air, a lot still to come. It will be an interesting space to track for the next 6 months, and we'll have to keep this conversation going for sure. But in the meantime, I've been loving your economic updates, and something that I did want to bring up with you, because I'm quite curious, is around the amount of spare bedrooms that are currently existing in Australia as a whole, and it is a huge number.
It is. It is a huge number. So there's 13 million estimated to be at 13 million spare bedrooms. So it's a study. I didn't look in everyone's rooms in houses and their houses to work it out. It's based on a study that the ABS do every 2 years. So the way they do it, they look at household house size, and they look at household size. So they look at how many bedrooms houses have got across Australia, which they can find through various means, and then they look at how many people live in that house. And they use a measure that it was introduced in Canada first, which basically says that if you've got, you should never have more than 2 people per bedroom. Under 18, you can have 2 people per bedroom. Any single person over 18 needs to have their own bedroom. So they've got various, restrictions that they put in place to calculate the number. So based on that, the RBA measured how many spare bedrooms everyone had, and when you calculate that out, it works out to about 13 million across Australia. The interesting thing was, not interesting, not surprising, was that when we looked at who didn't have enough rooms, it was people that were living in multi-family households. They typically didn't have enough rooms. And then when you look at the people who were less likely to have a spare bedroom, it was people in the rental market. So they're the two that are undersupplied. And then when we look at who has a lot of rooms, it is singles and couples. It was quite surprising. A really high number of couples had more than 3 bedrooms spare in their household. So, we can clearly see that it is, we do have a challenge of people, particularly older people, who are sitting in very, very big family homes, but don't necessarily need the space, but obviously for financial reasons or personal reasons or emotional reasons are choosing to hold on to and living in that bigger property.
It's definitely really interesting. And the reason that I did want to bring it up is just because I know a lot of investors out there wonder how many bedrooms they should be, looking at purchasing properties of. Is it a 2-bedroom place in a unit complex in a city, or is it a 3 or 4 bedroom home? Should they be looking at 5 bedrooms? Is that a waste of time? Where, is there an answer to that as to what they should sort of be looking at?
Yeah, look, I suppose there is. It is dependent on location. Obviously, if you're in a university suburb and, you want to buy an apartment, you're probably better off buying something with 1 bedroom or 2 bedroom. And, we see it most now in places which are undersupplied for apartments, such as Hobart is a really good example. That is a place that has attracted a lot of students, but at the same time hasn't been able to provide much suitable accommodation. So, if you do have a small apartment in that location, it will do particularly well. But then also, I think you also have to think of the demographics of who rents. Renters are typically younger. They're typically lower income. It's not to say buying a big family home wouldn't have an audience. There's definitely locations in premium suburbs across every capital city where, a big family home in Paddington in Brisbane or, Mossman in Sydney or whatever, those areas are clearly seeing very strong demand from renters. But, we know that the bulk of renters are young couples, singles, lower income, and that, I guess, is the mass audience for rental properties.
Very interesting point to ponder. I guess, it's up to everyone's personal choice what they do choose to invest in, price points as well, location, all good to know. And then another thing that you talked about recently that was also interesting was around electric vehicles and the rise in popularity of those. I see a lot more Teslas driving around now than I've ever seen before. And so there's obviously that market out there where we might see some stimulus come in, incentives for people to start, going a little bit greener with their cars, which in turn is going to have an impact on the property market. But it's not just it's not just pigeonholed into one point, is it? There's going to be sort of a widespread need for facilities when it comes to electric vehicles.
Yeah, the automotive industry is fascinating. If you have a look at some of the changes that are taking place, obviously electric vehicles is a big one. We can clearly see a shift that's taking place at the moment globally with a number of electric vehicles. Australia still has very low take-up But we do have a new government that's very focused on the environment, and it has committed quite a lot of money to not just ensuring that we see more development of electric vehicles and more take-up of them, but also ensuring that there's enough charging points around Australia to really help with them. I guess there's two other changes that are happening in the automotive market. One of them is obviously driverless vehicles. That we haven't really seen much about that of late, but that technology is moving pretty quickly. And then even at the most extreme is flying vehicles, which sounds so out of space. When we have a look in the US now, there's 5 publicly listed companies that are producing these vehicles, and see them as a totally a viable proposition in the near future. So I can't really imagine jumping in a flying vehicle at this point, but
Sounds terrifying.
It's terrifying and weird, but so we know that there's a lot taking place. So the thing that really sparked my interest was reading an article about flying vehicles, and one of the things that they said in the article was that the development of a flying vehicle is actually not that hard, and the technology is pretty much there, and that's not the hard bit, because that's what I thought was a hard bit. I thought, well, that sounds really difficult, but they said the hard thing is the problem. It's a real estate problem, that they need somewhere to land, and they need somewhere that's accessible for people to be able to get into them. So then it just got me thinking more broadly, well, what are some of the challenges with all this change in the automotive sector, and how does it impact property? So I guess the main one will be these charging stations, that we will need to see more of them around the place, and in good locations for people to use. When we have a look at the number of charging stations around Australia, you go somewhere like the Northern Territory, and the number is absolutely dire. It's almost impossible to find one. And then you get to suburbs of Sydney, and they're quite easy to find. So I guess that's the first one. Then it sort of extends on to petrol stations. How at the moment it's still a very long switch from petrol powered vehicles to electric, but over time, how will they need to change? And then even driverless vehicles, if we do have these driverless vehicles, do we need to even have a car at our home? And, will the cars go live elsewhere in some industrial facility in the outer suburbs, and, we just call them up and they come and get us? And then do we need a garage? And how about multi-level garages in capital cities, in the CBD? Do we need those? And, so I think there's a lot of, they're not issues that we need to worry about right now. Right now is more around charging points and ensuring that there's going to be enough charging points. But it does have massive impacts potentially on the built form, and the built form not just from a housing perspective, but also for commercial property.
Absolutely. It's a very cool prospect. And I think, where are we at? I don't know if you can answer this question, but do apartment buildings yet have to be putting in electric charging stations or things like that?
I don't think so. I don't think there's any legislation, but one of the interesting points to think about is say shopping centres. If you need to recharge your car, and it's not a quick process. You can't just fill it up in a couple of minutes like you do your petrol tank. So a shopping centre that is well supplied for charges, it has the potential to do a lot better, because people are stuck there for half an hour or however long it takes to recharge their car, and a lot of people will see it as the opportunity to go do their grocery shopping. They may shop longer than they otherwise would, and so there has the potential to allow people, I shouldn't say track people, but it does make it more of a captive audience if you are able to provide a higher level of charging station than some other local centre.
Yeah, very good customer service there. Multitasking at its finest too. And we're doing that already. You go to a petrol station to pick up your milk and bread. It's, not too far on from those kind of things anyway. But Nerida, it's been so lovely to chat with you. I feel like not only have you laid out clearly what some of this stamp duty and interest rate rises could be meaning for investors in the space, but also just, shone a light on what we couldn't be expecting, what else is happening in the market at the moment, because it's all important, but it's some of those things that we do forget about every now and then. So thank you.
Thanks for having me.
It's been fun. Looking forward to doing it again. In the meantime, though, to everyone who is listening, we hope you have liked this this episode, please like or review us on whatever platform that you do listen to your podcasts on. Reach out if you have any questions, editor@smartpropertyinvestment.com.au, and be sure to subscribe to our website if you haven't already. Stay up to date with us on our social media, Facebook, Twitter, and LinkedIn. Until next episode, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
It's safe to say the property market has been red hot over the last few years, with some of the markets we've selected in 2021 rising over 40% in a 12-month period. It's very likely that if you're a property owner, your property has gone up 20% minimum in value in the past 12 months, and you have most likely accrued sizable equity that can be recycled and extracted to build your investment portfolio. With interest rates increasing, you might be wondering where to invest to maximise capital growth and cash flow in 2022 and beyond. Well, to save you time, energy and guesswork, award-winning author and regular guest on the Smart Property Investment podcast, Paul Glossop and his team at Pure Property Investment have outlined the top 30 affordable suburbs poised for strong capital growth over the next few years with sound cash flow. Grab your free Top 30 Guide to Property Investment guide today at purepropertyinvestment.com.